What's up YouTube, it's Louis here. I hope you're all well. Today we're going to be looking at Bitcoin. Excuse if you can hear any background noise. I am again outside in the garden as it's not too cold, it's a bit mild, so trying to enjoy this mild weather. So we have two significant key levels we need to watch out for, and you can see even if we remove the fibs, you can see that we have support and resistance. We're in that range. Now turn the fibs back on. How did I get them? Well, I've measured the dip, the bear market, so from the tip top to the lowest low basically, and you can see that when you get above the 618 over here, 9.7k, it's basically telling us we're going to the one minimal and then on to the 1618. Now this is what we always say on the channel. We draw out, especially when you're learning the fibs, draw out this box, this golden pocket, so you know that once we're above it and we can confirm support above this box, we're good for continuation. Minimal target 1, so you could have a cheeky trade from there to there, and then obviously roll over before continuation to the 1618. You could have even held the trade from here all the way to there. Now of course in the short term you can invalidate that 1618 target, 61k. How do you do that? You need to lose this golden pocket, and we then say, okay, we're no longer going to the 1618 at the moment, but as long as we close above this low, then there's chances of us getting back above the golden pocket and then heading to the 1618. And this here is the prime example of what I say in every single video of mine. Bitcoin, the Bitcoin chart, the mothership. And this is why this chart is all that matters in crypto. You can see rolled over so nastily. I remember this dip. I was in crypto in this dip. I think I got into crypto roughly July time 19, so I'm near the top, and I sold just before we dipped. I think I sold on this rally back up because it went down for me. I was a noob. Come on guys, I was a noob. I was just starting out crypto. I think I was in it for about 3-4 months by this time where it started rallying up. I sold in and around this rally, and then obviously capitulation. For some reason I was a noob, so I'm not gonna lie to you. For some reason I remember on Instagram and everything, the amount of FUD on this. Crypto is going to Bitcoin's going to zero, it's never going to recover. And honestly, that FUD scared me. I did not even buy this dip until I was confident we're done, and I bought back in and around 9.4 9.5k in around here in July again. So literally I've learned to deal with the emotions. I've learned from previous obviously capitulations that the best thing to do is just to hold. You can see, yes, we dumped down nasty. I did sell before the dump, amazing, but why didn't I buy on the dump? Why was I buying here as it was going up, and why didn't I buy down here? And this is what I've come to learn and to realize over these last almost 3 years now in this market. So this was my, well, obviously I got in before, but where I went like heavy into crypto was in and around here just before we got above the 618, confirmed its support, and that's what sent us up basically. So we know that this is the key support, we know this is the key resistance, and we have the 1414 in between, and you can see that we are hovering around that area right now. You can see that if we zoom in even more, we're actually holding the 1414 exactly, especially over these last 3 days including today. Basically you can see we went below, got back above, felt the 20 EMA. That means we should go lower, and that's why we have this technical target here that we've been saying over this week or the last week on this channel, and we'll go through that in a bit more detail soon. But I just want to draw an area because I don't like that we've had obviously candles down here, and the reason is because I draw support and resistances as boxes, because it's not a single line. Of course it can be like a psychological level, but I just like drawing boxes basically. I'm going to actually drag it down to that wick because we don't really want to go below that wick, and we actually have, I think we went $20 lower than that, so you can't really see it, but we did go $20 lower. I'm just going to confirm on the fibs because I think when we found out about that 1474, I was playing with the fibs and I just played around with the 382 and the 236, and I put the 1.382, and you can see over here that's lining up exactly with that wick, the point that we do not want to close lower basically. Of course if you're to roll over more, I think you'd be coming into the swing low down here, and we'll basically go through that in today's update. But for now I'm just going to get rid of this 382. We only need that 0.382, but I just wanted to show you that 1.382 is lining up exactly with that. So for me it's telling me that in this massive range from 30 to 60k we've got a midpoint, and that midpoint is 39 to roughly 42k. So we basically want to hold above this box. You can see it's a swing low. You can see when we broke this swing high over here, we started making a new swing high, and when we come to make this to find the swing low, we should have sat on this high basically, but then you lost support and you confirmed it as a resistance over here. So it's telling me that actually this move here was a fake out and it's not the true resistance. So we'll draw out the true resistance. When we look at support and resistance, we want to look to the left. The structure leaves clues. So we draw resistance here, and now we're looking to the left to see if it's being respected. You can see a wick rejection there, massive fake out, dumped back down. You can see support just there. So this is how I know it's accurate, because we got taps on either side as support and resistance. So this is why I know that this 51k resistance or support point is accurate. It was a previous swing high. When you do lose your swing high, you go to the previous one, this swing low down here, and that's why when we back tested it as resistance, well, first of all, you actually met it down there, and then you came back up, got rejected, found a midpoint, a base, before trying to obviously break the resistance, getting rejected, obviously faking out on the EMAs and continuing down, basically filling in this wick and obviously meeting our target. I can show you guys that with this dump over here, that we met all our targets, and that's why we had a relief rally before continuing down. So swing low to swing high, I gave you this on the channel, but again, I remember that I was only calling for 49k, and of course we rolled over more, and we met the two target exactly down here, the 2414 42k. That target, man, that's why we started heading back up, but you got rejected here at the 1618. So we need to then use our fibs from this low to this swing high over here, and you can see now that when we lost this golden pocket here, what we should have done is actually continued from this. You should have gone higher, broken resistance, impulse, correction, continuation, but you lost this, creating that reversal wave. You come back exactly where you started from. So you came up and you retraced 100%. That's what the one means basically. You retraced 100%, and you can see we came down, met our 1.272 target in line with this, which was our larger 1.382, and you can see we've bounced back up, came into the 786, and we're forming some sort of ascending triangle here right now, as you can see. But we got rejected from the top. We basically ran into this resistance point. We did get above it, but you can see that eventually this was a fake out, the move above, and the reason being is because you have wick rejections back at this, and that's why we're going lower now. So technically you should be going down, you should be going to put a lower low. You've rejected the 20 MA, but this can obviously, we can stop this. How? By putting in higher lows, and at the moment you're holding the 142k, and it's also that larger 1414 with wick rejections to the downside. So this is positive. Is this the double bottom we've been waiting for continuation to the upside? This is what we need to now see play out. Now if we go to the 4-hour time frame, then we can go in a bit more detail. So let's get the fibs that we were using from the other day. So from here to there, swing low to swing high, you've come down impulsively, correcting, and after this correction we're going to continue down. So we need to find the target when we continue down, and we'd measure the corrective wave basically before the next impulse, and our target would be the 1618 once you lose the 1. We created that reversal wave by losing the 618 with the target at the 1. This is where I left you guys off yesterday, and we rolled over to the 1.272. You can see you bounced before getting there, bouncing off this ascending support of the larger ascending triangle. You come back up, retested this previous support as resistance, so it basically means that we are heading down. Our 1.272 has now stepped in, bringing us back above the 1, and this is a valid point that I always tell you in the videos. When you lose the 1, your target is the 1618, but two things can happen. You can bounce from the 1.272 and the 1414, and as long as you get back above the 1 and can confirm that as support, you may not head lower. Now, one thing that's very nice is to see this bullish engulfing, a bullish, in this case, reversal candlestick pattern, but we are in this downtrend with lower lows and lower highs. So a lot of the time this means that bullish candlestick patterns or bullish chart patterns either work in the short term or not at all, and potentially this is just working in the short term, although it's an amazing reversal candlestick pattern for bullish continuation. You have now run into the 20 EMA, as well as this larger falling wedge that we've had on this channel literally for God knows how long, since November time or something like that. With our technical target, once we do break out and it not being a fake out like up here, and we do confirm it as support, our target would be 69k. So that's our target out of that falling wedge once we eventually break out, potentially with this double bottom we are waiting for. Now, however, if we do get rejected here, you can see that potentially a double bottom is falling, but a rejection would fail to basically break this neckline, validate validating the pattern. So to validate this pattern, you basically need to break above 42,360, but until then it's not valid. Even though it looks like it's forming, it's not valid, and so there's a risk of us continuing down. And where do we continue? Well, first of all, if we were to then lose the one and fail to hold it, that's when we would continue down to our 1618 target. You can see that it's lining up nicely with these lows over here. So basically maybe a wick down to here. We would like to hold this box slash this green line, and that's why it's there. This is the lowest low over here, and obviously we would like to close above that lowest low inside of this green line and white box. Basically I wouldn't mind a wick down to this, but not closing below 40,788. Now if we do roll over more, the reason is obviously we need to look out at this larger Fibonacci, and we are at the one right now. So if we lose that support, obviously you would be losing that smaller one as well, and so you technically should roll over to these next targets down here, the 1.272, the 1414, and the 1618 at 36k, sort of lining up with this low. And that's why we've got this low, I think actually, yeah, sitting on that low right there. Exactly. So it's this area that basically I think that we would hold as support if we were to roll over more, maybe a little wick down to that 1618 before holding above this. But that's like a, I wouldn't say worst case. My worst case scenario is back down here, because it's your technical target. So I would say 31k when we've measured this impulse to the upside. So that's my worst case scenario, but I'm not looking at that until you lose obviously this low over here, this significant low. If we go to the daily time frame, so yeah, it's this low over here. If we lose that, then yeah, I think that we're going to be coming down to these lows over here, because look, we're in that large range. This is your midpoint. Hold above the midpoint, which is also previous swing high, then we should use it as a swing low, which we're seeing here and here at the moment. Lose that, you're coming to the previous swing low. So it makes sense. The fibs are telling us that as well as us knowing what swing lows and swing highs mean. So yeah, lose the one, we're coming to this 1618, but that would put you below this larger one, which we're sitting at nicely at the moment. And of course, if you were to go lower than this green line, we will be coming to these next technical targets, where you could get bounces off here to get back above the one, invalidating further downside, just like we saw here when we came to the 1.272, got above, and we're holding the one. If we can hold this, then that's it. We could start seeing a upward movement, and we would need to break this ascending triangle's resistance point for continuation to the upside, with a breakout of the falling wedge with a technical target at 69k. That is it for Bitcoin's update today. Hope you enjoyed it. Thank you guys so much for 1.5k subscribers. It really means the world to me. It's crazy how much we've grown over the last 3 months or so. Now hit 100k views on the channel. This is immense, guys. Thanks to you all. Please like, subscribe, and comment what you think is going to happen next with Bitcoin. Guys, I'll catch you in the next one, and as always, peace.